Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets fall to the lowest point of the day. The Nifty trades below the 11,900 mark and most sectoral indices trade with losses. Zee Entertainment is the top Nifty loser for the second day running. The stock has fallen 8% in 2 sessions and has broken below its 50-day moving average. Interglobe Aviation snaps a 3-day losing streak. The company, along with Qatar Airways, will make a strategic announcement on Thursday. And Titan, along with Tech Mahindra, are the top Nifty companies reporting earnings today. While Tech Mahindra is flat, Titan is trading with bit of losses. Good afternoon, Girish. Finally, we've snapped the 7-day winning streak today.
Yeah, it's not something that bulls would be very happy about, but hey, par for the course. You can't keep on rising every single day. But it's a muted kind of a pullback as well. Nothing too dramatic about it. The Nifty banked down about 0.5%. Just a couple of stocks that I want to highlight very quickly before we get to the heat map. Dabur should come up on your screen and Punjab National Bank should come up on your screen. The intradays would be helpful out here. Dabur about 2% higher in trade, and the surge that you see was on account of numbers which look better than estimates. Flashing on your screen below the numbers. Margins are better than what the street was working with. Volume growth is largely in line with what the price, the band of expectations was. So that is as far as Dabur goes. And PNB, it's a very difficult stock. The numbers may be bad, but it's a very difficult stock to trade. So you'll probably see this downtick, but at any point of time, this might get reversed as well. For now, the stock is duly reacting. But let me not dwell too much on this because I'm sure we'll talk about this in detail. Should get the heat map up for the large caps at least and show you what's moving. Zee continues to grind lower. So this is almost similar to how it was looking at the start of the trading day. Maybe a bit more adverse. Sun Pharma too was the top loser and is amongst the top losers even now. So throughout the day, it has stayed lower on the back of Taro's numbers. Axis Bank, IndusInd Bank, and that whole banking pocket is not looking all that strong. ICICI Bank to down 0.5%. What has done well? Yes Bank up 4%. Bajaj Finance up 2.25%. UPL, Bharti Infra and Bharti Airtel are amongst the others which are doing well for themselves. The broader of the spectrum, Divina, a couple of names that are highlighted, but those are not necessarily the top ones in focus. There are a clutch of other names which are moving around.
There are a few other results also, like Godrej Properties, that came out during the day. It was a disappointment to see the bottom line shrink a bit this time around, but they've said that there were no new launches, there were no new deals that happened, and therefore you saw the top line shrinking. But the bottom line obviously came in higher. But individually, taking a look at what the indices have done in the afternoon session, taking a look at the mid-cap index, which is down almost 1%. Indiabulls Ventures is up about 5%. You've got Quest Corp about 3.5% higher. PNB Housing Finance 1.5%, and then you've got the likes of a Future Consumer, which is up about 1.3 odd %. Future Enterprises reported its numbers, and therefore that stock also doing well. Amongst the losers, Indian Banks down 5%. You've got Bharat Electronics that reported a number yesterday. Disappointing set of numbers, and the stock's been beaten accordingly. NBCC is the other one, and then you've got the likes of a Federal Bank, City Union Bank, some of the smaller banks, which are looking weak in today's session. From the small cap space, just quickly pulling that up as well, which is in tow with the mid-cap space. Losers include the likes of Chalet Hotels, down 4.5%, Ashoka Buildcon, NCC, IRB Infra, and amongst the gainers, Dr. Lal Path Labs, which actually was down in the last 2 or 3 trading sessions, has picked up some pace today. It's up about 2.7%. Indiabulls Real Estate is up, and Credit Access Grameen is up about 3.7%. Well, what else is happening in the futures and options space? Navneet is here to highlight that for us. Navneet.
Thanks for that, Divina. Finally, some sell-off seen once again at higher levels. Not finally, but I guess the traders today will be watching out for the 11,900 mark. That remains key on closing basis because that was a strike where a lot of writing was also seen on the put side. So right now, 3% higher when it comes to the Nifty futures, so no major build-up seen there. For Bank Nifty, which was witnessing a lot of OI build-up in the last 2 days, well, the third day in the running, and by the way, today is the third trading day of the new series as well, so 16% higher. So there's a lot of trading action coming in for Bank Nifty futures. India Volatility Index has seen an increase of about 1%. I remember when we opened today, it collapsed 13 to 14%, touching levels of 13 as well. On the option side, now, interestingly, maximum open interest, as we know, is at the 11,800 put and the 12,000 call. So we failed to surpass the 12,000 level. There were 3 attempts made so far, but on the put side, 11,900 put is the one where some bit of writing was coming in. But as we speak, Though index is trading below that mark, the writers of the strike have still not run for cover because it's added about closer to 5 lakh shares. So it remains to be seen whether at these lower levels there can be any recovery or not. But for the time being, 11,009, 950 and 12,000 call strikes have seen open interest addition of between 10 to 14 lakh shares. Very quickly then on the stock futures side, BEL is down in today's trading session. Short build-up seen after the numbers came in yesterday, and the stock's also fallen on heavy volumes on the cash side. Futures open interest 19%. NCC will be coming out with the numbers in a short while, and we'll be interacting with the management too. Ahead of that, the stock's trading weak. It's fallen below its 50 DMA, and Indigo, that's Interglobe Aviation, that's the stock has moved towards its 200-day moving average after falling in the last 3 to 4 sessions. Futures indicating some long positions coming by. And Divina, interestingly, today is the day when the short sellers of the last series will be going in for auction. I just learned that the auction will happen at 2:30. The exchange has just put up the file, and in that one stock, now remember all the stocks starting October series went in for physical settlement, and out of which short sellers who were unable to give delivery will have to participate in the auction that starts at 2:30 p.m. Now the file that has come on the exchange's website, one stock which is standing out, it's State Bank of India. Now remember, this was a stock which was quite active. Almost 5.8 lakh shares are there for in the auction process today, and that's a huge size when it comes to a large cap Nifty company like SPR. Let's see on back of that auction whether there is any sort of stock movement or not. Let's pull up the intraday chart and see. Currently it's sitting with gains of 1%, and also remember this has been an outperformer in the Nifty PSU banking index, so we'll watch whether there is any sort of reaction on the underlying around 2:30 towards the closing as well.
All right, the stock's already up about 1% or so, and the last 1 month particularly has not been bad for SPI. The stock's actually moved up about 27%. So whether or not this spurs some more stock price activity on the upside, we'll have to wait and watch. But bringing in a market voice, Shailendra Kumar of Narnolia Securities. He's joining us right now on the show. Shailendra, thanks very much for taking out the time. Markets have taken a bit of a breather after the stellar run-up that we've seen over the last 7 days of trade. Probably warranted in a way, but would you use this as an opportunity then to enter the markets?
Yes. See, the current rally that we have seen throughout the month of October and now a couple of days of November, my own sense is that the rally is yet not over. There are a good amount of chance that in a shorter term also the Nifty will go and make a newer high. For the investor, the important thing to discuss right now is where the base of the market now is. So a month back, you had all kind of a negativity around economy, the slowdown, etc. But you made a low around 11,000 and you bounced from there around 9-10%. If you look at the quarterly numbers, and we are halfway through the Q2 result season, from Q1 to the Q2, the management commentary incrementally is not more negative. So they are either equal to where we were in Q1 in terms of overall business outlook, or a little bit improved also. Now that tells very clearly that now for sure 11,000, 11,200 is a firm base for this market. So that's the important thing to keep in mind as an investor. Secondly, if I look at 11,000, we were getting a lot of support from domestic mutual fund inflow, etc. And just last month, this FII flow changed the context, and we are trading close to all-time high, not the 11,000 kind of a level. So between the range from the base to the upper boundary, and upper boundary you can take it in this sense that all through last 4 or 5 years, the Nifty has consistently traded around 22 times 1 year, 12-month trailing earning. Now, if I look at the earning for FY20 as something like a 575. So 12,600, 500 is something which is the near term, kind of a resistance from fundamental point of view. In this range, how the movement will happen will depend upon a lot of variables, because November again you will get the Q2 number, GDP, which will not be that exciting. So a bit of a skepticism now at this close to 12,000 is okay, but one should keep holding the position whatever they have. They look for the internal changes in the market. So like initially consumer stocks were doing much better. Look at the Q2 number, the credit stock, the corporate lender has come out with the only pocket where the results had been across the board pretty nice was the corporate lender. So bit of a position reshuffling is required at current level, but nothing like a selling something right now. Holding for next months and all is still a better idea.
Okay, got that. Just pull up an Indigo. We were talking about that stock a little earlier on, and how the stock actually snapped its 3-day losing streak on the back of some sort of a strategic announcement with Qatar Airways. But we have some statements coming out from the Qatar Air CEO, Mr. Al Bakr, and he speaks in an interview in Kuwait where he's saying they won't be buying a stake in India's Indigo Aviation. The plan is for a commercial deal with Indigo and more of a tie-up with a code share accord. So that's something that's probably, not sat down too well, and you've seen the stock price correct significantly. In fact, now back in the red for Indigo. It's down about 0.5% after that big surge that you saw during mid-afternoon when the murmurs of this particular strategic announcement started to pick up more steam. 14.29 on Indigo. Shailendra, do you track aviation as a space, and specifically Indigo?
Yeah, sure. For quite many years in the past, we were in the camp which were liking Indigo because of the excellent cost structure, whether the operating cost or the fixed cost. They were managing the whole operation pretty nice. But recent development, a lot of between the promoters and now this, a lot of news flow around the tie-ups, etc. In that scenario, a SpiceJet is something which is more, is better idea. Because number one, in terms of passenger load factor, continuously it's improving for a SpiceJet. And recently, if you look at all the operating metrics, they have consistently shown improvement. So among the two listed aviation stock, Indigo was a structural idea, but I think a SpiceJet is a better risk-reward opportunity for an investor at the moment.
Okay, I just want to look at the metals index as well. I think that in the mid-afternoon session was a clear outperformer versus some of the other indices. I was up almost 1%, but from there, as you can see, it's gradually cooled off and now down about 0.5%. However, one or two stocks that have done really well and in the last 7 days of trade have managed to beat the metals index in terms of performance. One of them has been NALCO, National Aluminium. Alongside that, 2 days of interest that came about in sale also took it up higher. 7 days Nalco has been up about 10%, and as you can see, there's no form of a give back for the counter. 14 days on sale as well, but today's session has taken a bit of a breather. There's some amount of profit taking on the counter, which is down about 1.2%. As a pack metals for metals, Shailendra, is the interest coming back according to you?
See, my own sense on the metal pack is you have some kind of a positivity in the pack due to US-China trade talk, etc. But more importantly, the kind of rally that was there in the Nifty 10%, this has created an atmosphere where the quality stocks are actually quite valued. So most of the PE ratio, if you look at, they are trading at all-time high for most of the quality names. So a bit of a breather in the market in terms that mean reversion is going to come and play in the market. So what is happening today is a kind of a mean reversion. So those stocks which were bitten down, the valuations were too, trading at a multiple year kind of a low. So from those lows, those valuation multiple requires to get to a mean kind of a level. So those rally are not, I will not subscribe to a structural rally in global cyclicals like a metal from here on. There are good many moving parts in global macro, which doesn't allow you to take a very structural 4 or 5 year view on those stocks. Cyclically, mean reversion in valuation, sometimes some news on some smelter going off in China and some aluminium stocks started running in India. So those will keep happening, but structurally I don't think there is any reason to buy these stocks for a multiple year holding period. Tactically, for mean reversion valuation expansion, you can play, but the upside will be 30%, 20% kind of, not very multi-year kind of rally to think of right now.
Okay, that's about the metal space, and a lot of stocks within this pack have been buzzing, and one of them was Jindal Steel and Power, which rallied nearly 9 to 10%, or rather more than that in yesterday's trade, owing to the coal auction of Barre Palma 4-1. But pull up Dabur, the stock, however, is witnessing some bit of profit booking. Pull up Dabur, we did address at the start of the show. They came out with the numbers. The stock's only inching higher. What's the reason for the same? Volume growth, remember, has come in at the lower end of what the street was expecting, which is at 4.9%. 6.8, whereas the couple of the analysts were also expecting a volume growth of in the range of 6 to 6.5%. It is the operating performance and how they have mitigated the pressures that were witnessed in the rural market. Now remember, this is a company which derives nearly 50% of its revenue from the rural market, and we've heard commentary coming in from HUL after their September quarter numbers where they've said that rural growth this time around was just half times compared to urban growth, and this is coming after we've seen rural growth at 1.5 times too compared to the urban growth. So good going in terms of operating performance. The margins have come in at 25% versus 21.2%. The management in their release have clearly said that they have mitigated the impact of macroeconomic headwinds and a prolonged slowdown to deliver a 4.1% growth in their consolidated revenues and an improvement of nearly 90 basis points in their operating margins. Shailendra, well, this is a company which derives majority, or rather 50% of its revenue from rural market. Clearly good performance, and remember, most of the company's bottom line have been boosted because of the cut they have seen in the corporate tax rate, but Dabur has not benefited from that. What do you make of the numbers? It is expensive, trading at nearly 50 times this year earnings. What should one do after they've managed to put up a good show in a tough environment?
See, a story like a Dabur, one has to look at it particularly in the sense that the consumer staple which are running right now, they are trading at multi-year valuation multiple high. My own sense, they'll continue being there till the time Indian economy does not start moving up. So maybe March of next calendar year, when actually GDP number, the consumption number, broader consumption number, the credit number starts improving, then these stocks in the consumer staples basket, including Dabur, will take a breather because of valuation. They'll go for a time kind of a correction. And we have a history. We saw in 2000, 2007, a lot of consumer staples name went into a time correction when actually India was signing. So industrial growth was happening. Right now, because that is not the case, we are still away from that event, say 2-3 quarters at least. Till the time, these names like Dabur also will keep doing better. The volume number is lower. Rural is not doing well. That's understandable. Every metrics that they had in their cost, in terms of their P&L cost items, they've already optimized to a point that further EBITDA margin expansion, I don't think there's a good amount of chance for any margin expansion. So the whole story of a staple like Dabur will be more on the volume number and some kind of a pricing improvisation, which they can do maybe a year down the line. But looking at the demand scenario, they can't make prices also go very high. So sales will remain tepid, but stock prices will not fall much because these are quality franchises. Their ROE, ROC doesn't fall for many, many years. So this story is structural. How much of price return an investor will get investing at these levels is something question mark. Maybe for a year it's safe to be there in this pocket, but maybe afterwards you have to be more in discretionary spend than in the staple kind of segment.
Okay, that's Dabur for you, which is now up about 3 to 3.5%. I think the futures will tell you what sort of long positions are also being taken here. It's up about 8% after the earnings. We have seen interest coming back into this counter. Besides that, Shailendra, I don't think we've spoken about the bank stocks yet, which do contribute a lot to the gains that we even see for a Nifty. 40% weightage coming up there. What did you make of the numbers so far? Because the private bank seems to be, the asset quality now seems to be improving. Do you think the NPA cycle has peaked out?
Yep. See, like since the beginning of this calendar year, we were of the view that the NPA cycle is peaking or has peaked out. In fact, if you look at a simple number, FY18, the GNPA was 11.5% aggregate Indian banks. Now it is close to, it fell to 9.5 in FY19, and now FY20, I think it will be close to 9.7, 9.8. So look at all the three metrics which can tell you about the NPA scenario, whether the GNPA is a percentage of loan book, NNPA is a percentage of loan book, or you can think in terms of slippages as percentage of advances, or you can think in terms of provisions. All the four different parameters which can let you know about how the scenario at the NPA level is, all four has improved. Look at this quarter numbers, all the larger corporate banks, whether from PSU or the private, so SBI or ICICI or Axis, they all have reported a better set of number in terms of asset profile. And this is very welcome. PNB has just come. It looks a little outlier because the GNPA and NNPA is higher. I have not gone into details. But mostly all those names, SBI, Axis, ICICI, larger weightage in the index stock, has given a clear hope that the next level of rally, whenever it starts, the actual larger rally, a new kind of a bull run, the credit segment will be the front runner or maybe the leader of the pack. along with the consumer discretionary, particularly the services kind of space. So this is corporate lender remains a very a structural story for 3 years for every investor to have in their portfolio.
Okay. Another one probably that has been a favorite, a market favorite, has been Titan. But it looks like there are a few chinks in the armor right now. Q2 numbers will be reported today. The stock ahead of numbers is down about 1% or so. But we got an initial indication of that when they gave their Q2 update itself. So what is the market expecting out of Titan's Q2 numbers? We are expecting to see revenues marginally higher by about 3.7% to come in at 4,569 crores. EBITDA is seen higher by 9.9% at about 512 crores, while margins are expected to expand from the earlier 9.2% to about 11.2%, while the profits seeing an increment of 15.3%. Remember, the management had spoken to us at the time of the corporate tax reductions and said that the effective tax rate will fall from 29% that they were earlier, the bracket that they were in, to about 25%. So it's a 4% benefit that comes to them. However, jewelry segment, which is contributing about 80% to their overall revenues, will be witnessing some amount of weakness in this quarter. As per their quarterly update, effective revenues will decline about 2% as per analyst expectations, while a rise in retail sales were cancelled out by maturing hedges. Watches, moderate growth expected there. Weak consumer sentiment led to the moderation of growth, contributes about 17% to the total revenues, and to see about 7% growth for the quarter, while eyewear to see about 28% growth. Shailendra, this one has been an investor favorite as well, but we are seeing that this particular period of slowdown has impacted them negatively because of the sharp increase in gold prices in the jewelry segment particularly. What would one do with the Titan now?
Yeah. See, Titan is a structural story. So 1 quarter of volume coming down because of gold prices or maybe some kind of here and there effects should easily be ignored. Look at the broader sense. The Titan is basically a bet on a structural discretionary spending going higher. Number one. Number two, organized retailing in generally improving. So there's a good amount of market share gain opportunity still with Titan in that sense. So that's a structural story. Look at the broader valuation level. You have Louis Vuitton has bid for Tiffany recently. And if you take a kind of a valuation comparable from that deal to what Titan is trading right now, it's very fairer to see Titan, trading between a broader range of say 1150 and say 1550. So this is a kind of a range which is valid for a 1 year sense. So 1 quarter, bad quarter is if it comes, it's an opportunity for an investor if price falls by 5%, 7%, and keep a 30% kind of a yearly gain assumption from those levels. It's a very safe stock. A structural 1-2 quarter decline is an opportunity for an investor to get into a company like Titan, where the basic business parameter on which this company grows remains intact. So the idea for Titan is to not look too much into those small numbers. We also keep those doing those numbers. But the idea as an investor there in the stock is look for if there is some quarterly weaknesses which comes up and which can come up. So in the next couple of quarters, some quarter will be a blip. Use those blip and price reaction to buy those companies because they are a structural growth story, and valuation, though not very cheap, but globally comparison, if you look at, there is still good amount of room to make you some money on a stock like Titan.
Okay, so seeking opportunity in adversity. Thanks very much, Shailendra. Really appreciate you taking out the time. Titan being a structural story, maybe quarterly blips will happen, but that's a long-term story. Moving on, Morgan Stanley has a modest overweight on India. Jonathan Garner explains why in this conversation that I had with him earlier on in the day. Listen.
So if you look at about 6 to 12 months after Mr. Modi was first elected, that was when foreign investor positioning in India peaked out and people were around double benchmark weight for India versus the EM index. And that's not just the highest they'd ever been in terms of exposure to India, but also the highest we'd ever recorded for any major emerging markets in terms of optimism. So yes, it's dialed back from those levels to a slight overweight versus benchmark now, where it has actually stabilized in recent weeks. And again, going back to my colleague Ridham's earnings forecasts, 20% CAGR 2 years running off a very depressed base, that should be better than the average in emerging markets. And with the forward PE roughly neutral versus history, this is why he and I have been recommending even at this depressed growth and earnings environment, we have been recommending a modest overweight on India this year, and as you covered, it has outperformed, admittedly with some volatility, but it has outperformed year to date.
So in the emerging markets universe right now, while you've given us your stance on India, which is the more preferred market currently?
So we're overweight Australia, Brazil, India and Indonesia. We're neutral on the large markets of North Asia like China, Korea, Taiwan. We're underweight MSCI, Hong Kong, Malaysia and also Mexico.
Okay, got that. What about the emerging market currency basket? I mean, we've seen the last 5 weeks particularly being positive for the emerging market currency basket. Do you feel that that's likely to continue, and what can you attribute that gain to?
Well, that's related to this whole debate about where the global economy goes next year, and obviously also the tendency of the US dollar to be somewhat weak now that we've had 3 Fed rate cuts, and we're clearly in an environment where the Fed has changed its overall policy stance. I think last week's comments, particularly at the press conference by Fed Chair Powell, really did suggest that we're unlikely to see the Fed going back to anything like a rate hike cycle for the foreseeable future, and that would tend to support traditional carry trade activity in emerging currencies. And as I said, with India's inflation well under control, its current account deficit well below 3% of GDP, with oil very range bound if not down, that probably means the Indian rupee can be reasonably stable.
In India, it's a peculiar case where some companies, even with higher multiples, even with higher valuations at this point, are considered to be the safer haven stocks, and people start to invest in them despite the premium that they attract. In light of that, do you feel that it's still going to be the earnings growth momentum that's going to be driving more interest, or a tactical play on valuation mismatches that could be something to look at?
So we are getting more interested in value cyclicals, including in financials, consumer discretionary and industrials, and that applies across our coverage universe. We've been very much across our coverage universe holed up in sustainable yield plays based off the reduction that has actually taken place in long-dated government bond yields in the US. But we're starting to show an interest, we're starting to see an improvement in earnings in cyclical sectors. That's been more in the IT hardware sector so far, which is not that represented in the Indian market, but we're interested in whether that can actually spread.
All right, that's Morgan Stanley's view on emerging markets, and in that India as well. But pull up Apollo Tyres. Let's see how the stock's reacting. They came out with the numbers, and they've also approved private placement of as much as 500 crore rupees of debentures, and they've approved issue of NCDs for 500 crore rupees. That's what the press release is currently stating. Because you can see the stock was actually trading in the red, and it's just recovered. It's just about trading flat. Now, looking at the numbers, I think the profit has come in at 83 crore. Versus an estimate, Bloomberg estimate of nearly 110 crore. So bottom line growth has been below, and the revenues for the quarter are at about closer to 4,000. That's 3,998 crore, and they too are below what the Bloomberg estimate was throwing about closer to 4,200. Maybe this is the fundraising which has given some bit of a lift to the stock price right now. And of course, we'll see how the operating performance for the quarter went by, and especially from the replacement market, considering the slowdown that we've been seeing for the entire auto space. That's Apollo Tyres, and since we are talking about the earnings, it is likely to be a subdued quarter this time around for Tech Mahindra on a consolidated basis. The quarter will see the impact of the AT&T deal signed in November this year. In fact, if you look at the breakdown, we're expecting the dollar revenues to just go up by 1.1%. And the revenues otherwise could go up by about 3%, coming in at 8,918 growth. EBIT performance will be closely watched out, especially when it comes to the EBIT margins for the September quarter. Our consensus is showing a number of 12.2% versus 11.5% that was seen in the June quarter. Remember, this is a sequential comparison that we're doing, considering it is an IT company, and the profits are expected to come in at about 940 crore, which could be a degrowth of about 2%. And behind the expectations, the revenue growth this time around will be largely led by the communication vertical, so we will be watching out for that. Pull up the stock price as well and check what's that doing ahead of the numbers. Since morning, I think it's just been about flattish. No significant move has come in for Tech Mahindra. That's sitting at levels of about 770. All right, markets. Nifty is below the mark of 11,900. Bank Nifty has seen cuts of about 150 points. A good time to bring in our technical experts. We've got Sachtanand Uttekar of Tradebulls who joins us right now. Hi Sachtanand, good afternoon. We've snapped the 7-day gaining streak, and important level on the downside, 11,900, and that's a put strike where we've still not seen any sort of unwinding coming about despite of that level being breached. What's your reading with regard to whatever trading that we've seen today?
Well, good afternoon, Navneet. In fact, the way we are looking at the market, I think, it looks more exhausted. And if you look at Nifty on the 30-minute scale, you can clearly see that there's a broadening top which is getting formed. So today, was the first sign wherein we saw a lower top, low bottom formation on the 30-minute scale, and Nifty did slip below the important level of around 11,900. On the daily scale, the kind of formation that we are seeing is more or less, it resembles a bearish belt hold kind of a formation. The confirmation will set in on a closing basis today, so it will be very critical to see how the closing shapes out in end of the day. But as of now, I think if you look at the overall clustering, 11,950, 12,000 has been a hurdle for Nifty, and unless we don't see a decisive close about 12,040, I think the market momentum could slip on the negative side. So right now we still continue with our bearish bias on the market. 11,950 to 11,960 on the futures is a good zone wherein fresh short positions should be created. 11,990 would be the stop loss for this particular trade, and we are expecting a swing back to 11,850, which is the base of this particular 30-minute broadening pattern.
Okay, that's on the index, so can look at some bit of a downside from these levels. But Sachtanand, individual stocks then, that's where much of the activity lies. What would you be doing this afternoon?
Well, we have three ideas, two on the short side, first one being Siemens. Again, what we are observing here is that the stock did manage to reach its life highs, and if you look at the overall journey, we saw very narrow body formations consecutively. In today's session, again 1670, 1680 has acted as a stiff resistance for the stock, and we have started seeing some short positions getting built up here. So we are expecting that this particular swing can extend right up to 1600. So short positions can be initiated in Siemens Limited with a stop loss close to 1683 on the higher side. And the second sell idea is on Ultratech Cement. If you look at the overall clustering, we saw a very nice breakdown from a contraction pattern. So basically, it looks like a triangular formation which has activated now. So we are expecting that this particular move can extend towards 4,000 levels. So fresh shorts should be added with a stop loss of 4185. So these are the candidates on the short side. On the long side, the overall structure of Birla Jute looks very interesting from the mid-cap side, since mid-caps had been outperforming. So this is one stock which is in our radar. So if you look at the overall weekly structure, we've seen a falling channel kind of a formation, and now the stock is placed at the upper bound. So we're expecting a breakout to be established here. So the stop loss for the trade should be placed at around 600, and once the breakout is established above 620, then we may see an extended move towards 660.
Okay. Birla Jute, an interesting one. Don't really hear about that stock too often, but watch out for that one. Let's talk about NCC that's just reported its numbers. I think revenues have come in at 1,732 crore rupees, while the profits, net income is at 80 crore rupees. That is slightly higher than estimates. Estimates were closer to 77.5 crores. So this is, I think, somewhere closer to 3.5% higher. There is another income component as well, about 70 odd crore rupees. That's the other income element in these numbers. The stock, though, has moved up from the lows of the day, and we should get the management shortly to talk a little bit more about this, but still in the red. Not a really big push that it's got post the numbers. 17.7 million shares have been traded on that. Rahul Randeria, independent market expert, is also joining us in the studios this afternoon. Rahul, very good afternoon to you. Let's talk about the index. What are you doing on the Nifty or the Nifty Bank?
Yeah, good afternoon, Divina. If we look the previous high, 12,108, and from there we have seen the index corrected sharply and made a bottom around 10,600. And after that it consolidated for maybe 3-4 weeks, and again we have seen a sharp rally. And again, now if we see this 2 points, point A and point B, the time which Nifty took a journey from 12,108 to 10,600, and compared to that, the recovery time was in a very short period of time. After government took proactive steps to revive the economy around 10,600. Now with the faster retracement, the case which we have seen on the charts, which clearly indicates that the momentum on the indices are very strong, both in Nifty as well as on Bank Nifty. Now today, after a three week of a stretch upside rally, we see some sort of consolidation at these levels. Now sooner or later we feel that again Nifty has potential to test the levels of 12,108, which is all-time high, provided again we have seen that it has broken out lifetime high on Sensex. So definitely any correction from these levels should be used as a buying opportunity. On the downside, 11,800 where there is a lot of concentration in the puts, so one should place a stop loss below that, and one should take a positional view above for a target of 12,108 on the upside. Maybe for expiry I feel that Nifty can close just about 12,000, which is the psychological mark. Again in Bank Nifty we have a positional target of maybe 30,870 on the upside. So maybe any correction from current level should be used as a buying opportunity, with a stop loss below 29,800 on the downside, with a positional target of 30,870 on Bank Nifty spot.
Okay, very quickly then, Rahul, on the individual stock front, I think you're playing the momentum stock today. That's Indigo, which is back in the green.
Yeah, after steep correction, we have seen that the stock has seen some sort of arrest of the tremendous selling pressure, and stock is consolidating. Again, in the first half, we have seen stock has taken an attempt to start rallying on the upside, but it has consolidated. So definitely, I feel that the stock is making a base at current levels, and we might see a rally from these levels in short to medium term. Therefore, swing traders can buy Indigo in the range of 1459, maybe on corrections to 1430, with a upside positional target of 1630 with a stop loss of 1395 on the downside. The second buy call is in PVR. Again, the stock has formed a long-legged doji till now, supported with volumes. So we feel that stock can see a sharp short covering rally from the current levels. Hence, one can buy in the range of 1739 to 1718 on the downside. Upside positional target 1830 with a stop loss of 1692 on the downside.
Okay, so two buy calls, PVR and Interglobe Aviation, and Bajaj Finance is now up about 2 to 2.5%. And remember, that's the one which hit once again its lifetime high of 422 to 2.9 in today's trade, 2.5% high. Let's bring in our next expert on board, Mr. G. Chokalingam of Economics Research and Advisory joins us on the show. Now, Mr. Chokalingam, good afternoon and thanks a lot for joining us. A word on the markets first, Mr. Chokalingam. The recovery that we've seen has just come in the last 5 to 6 sessions. Do you expect this sort of rally to continue, considering the earnings season has been better than what the street was expecting?
I don't expect any massive rally in Sensex and Nifty. As you rightly said, they already hit the record high, and we have the problem of slowdown in the economy, and also the corporate earning getting only boost from the tax. Whereas organic growth in the profit is not happening. So my view is that till March, Sensex and Nifty at best may rise another 5%, not beyond that. But I find a lot of opportunities in the small and mid cap space, because even though the Nifty Sensex are now record high level, the small cap space have fallen substantially. For example, if you take Group B shares of BSE, the combined market cap of Group B shares is around 7.8 lakh crore as of now. The same was around 20.6 lakh crore in March 18. So it has fallen about 62% from record high of 20.65 lakh crore in March 2018. So whilst B group shares have fallen about 62%, the Sensex and Nifty are hitting at a record high level. So there's a huge divergence. So therefore, my view is that till March, there would be a lot of opportunities in the small cap and mid cap. to create wealth, and it's already happening in the last 1 week. I think that kind of rally in the select to small and mid cap will continue in a substantial manner till March 2020.
All right, I think you've got JLR UK sales flashing on your screens. Total sales of Land Rover down about 17 odd percent this time around. And overall, any which ways, when we had seen Tata Motors numbers, they were slightly disappointed for the month of October as well. The stock, though, right now flat. But Mr. Chokalingam, if you've observed the numbers of the October month, a few of them have managed to do okay for themselves. So the festive season has not been all that bad. On the retail front, on the wholesale level, obviously, there's still that inventory which is getting pushed out of the system, and therefore, it's too early to rejoice on the wholesale front. But what would you do with auto companies now?
I am staying away from most automobile companies. As you rightly said, only Maruti has shown some uptick. But actually, the retail sales have improved. But you have to see in the light of the fact that prior to the festival season, we had nearly 6 to 8 months solid double-digit degrowth in the entire automobile sales. So, what would have happened, perhaps, that people are not buying in the previous 6 months, and during festival season they force themselves to increase their sales. So that is why we saw a good number. But I doubt, from November onwards whether that would continue. Just to give an example, yesterday we saw Automotive Axle results. I have not seen this company posting this kind of dismal performance. Its sales revenue is down 60% year on year. So, this reflects the demand for ultimately automobiles, because automotive axle supplies wheels, and which is a crucial input for automobiles. So if the major input supplier is seeing 60% year on year fall for the September ending, it means a lot for the next 2 months, that is November and December, for automobile manufacturers. So I would stay away from most of the automobile companies.
We're seeing that in the results of Apollo Tyres also, which got reported right now, which saw a little bit of a dent on top line, bottom line, as well as the margins, which came in lower. The only thing and it's back down, the lowest point of the day. The only thing that probably gave it that little bit of a breather in the middle was the fact that they were looking at some amount of fundraising closer to 500 crores. But now that's back down to 182 on Apollo Tyres. What else, Mr. Chokalingam, in terms of stocks that are interesting you right now from a 1 year time horizon?
Yeah, I would suggest a couple of mid-cap stocks, including one small cap. There's a company called Anjani Portland Cement, which is a small cap company suitable only for long-term investors. And this is owned by Chettinad Cement Group, which is very reputed cement group from Tamil Nadu. They have created phenomenal wealth for the parent company in the past, and they have taken over this Anjani Portland Cement from Andhra recently. It is one of the cheapest small cement companies, zero debt company, and it has got the backing of Chettinad Cement. In fact, in the annual report...
Mr. Chokalingam, I'm just going to interrupt you there. Anjani Cement, one stock that you've spoken about. We'll come back to you on the other ideas that you have. But just got the management of NCC on the phone line with us. Mr. Vaidi Murthy, he's the Executive VP of Finance at NCC. He's here to talk to us about the quarterly performance of the company. So, highlight for us what exactly the quarter entailed for you. There's been an increase in the other income. I think closer to 70 crores was the other income. A profit on the back of the taxes coming off. From 81 crores, they came down to 31 crores, I believe. So all of that has aided the bottom line. But on an operational basis, how's the quarter been?
Yeah, we have done a top line of 1,800 crores in the second quarter as compared to 3,137 crores in the second quarter of the previous year. There is a dip in the top line, mainly because of the heavy rains in various parts of the country in the second quarter of this year, and also the AP projects are not moving. These two things have brought down the top line to about 1,800 crores. Nevertheless, EBITDA of 233 crores and net profit of 80 crores we were able to achieve. EPS is about 1 rupee 34 paisa per share. For the 6 months period, the turnover is about 4,000 crores. EBITDA is 499 crores. And net profit is 161.36 crores.
Right.
Yeah.
Yeah. Mr. Murthy, just let's talk about the new orders in this quarter.
Yeah, we bagged about 1,518 crores of orders in the second quarter. that takes the order accretion number for the first 6 months of the current year to about 2,150 crores. And we are expecting better order accretion in the second half of the current year. As you know, in the first quarter, because of elections, tendering process almost came to a standstill. So we have not bagged many orders there. But now the order award by government agencies is picking up. We are confident further orders will be coming in the second half.
Mr. Murthy, the management's FY20 revenue guidance was somewhere closer to 11,000 crores, which on a year-on-year basis was anyways down 9%. Do you feel that, or are you going to be revising that guidance that you had given earlier on?
Yeah, we are looking at a top line of 9,500 to 10,000 crores in FY20 based on what we achieved in the first 6 months. And to achieve the 10,000 crore number, in the remaining 6 months of the current year, we have to do about 1,000 crores per month. We are confident of doing it. In fact, earlier we have done even 3,200 crores per quarter. So about 3,000 crores per quarter this year should not be a problem. We have got some marquee projects where execution is going on fast, and they are all central government funded projects, and the payment cycle is good. So we are confident, but maybe we end up with a 10,000 crore top line in FY20.
Mr. Murthy, talk to us about the finance cost has gone up marginally, though, both on year-on-year basis as well as sequentially. What's the debt picture looking like? Has your cost of borrowing come down after we've seen some, RBI cutting down rates? And how do you plan to cut down your debt?
Yeah, there are two things involved in this. One is the bank guarantee commission on our bank guarantee limits of nearly 9,000 crores. That has gone up slightly. That is also put in the finance cost. And as far as the interest on bank loans is concerned, there is a improvement. In fact, we are getting loans at reasonable rates because of the policy rate cut by the Reserve Bank, and passing on part of that rate cut to companies like us. So interest rates have come down, but the finance cost has gone up mainly because in the percentage terms it has gone up substantially, mainly because the turnover has gone down. And also because the payments are not coming, we have to depend on the bank borrowings in the second quarter. That also added to the interest cost.
Would it be safe to assume even your receivables, the trade receivables for the quarter have gone up if the payments are not coming on time?
Yeah, that's right.
So what are the receivable days, Mr. Murthy, right now?
That is about 142 days. It is slightly on the higher side, mainly because our payments are not coming in Andhra Pradesh. That's why the receivable days has gone up. But we are expecting it to come down because government is calling us for discussions, and also we are likely to start the payment process for all contractors.
What's the 16.5 crore exceptional item that has come in the P&L account?
That is a provision we have made in our investment into NCC Infra, our subsidiary company. That proactively we have done because they had some impact in one of their subsidiary companies, and so there is a diminution in our investment value in NCC Infra. That's why it's a one-time provision that we have made in the second quarter.
Okay. Mr. Murthy, just one last question with regards to the execution of the non-AP order book. 21,000 odd crores was assumed to be, the figure if 11,000 crores was the top line number. Now that you've revised the guidance lower to about 9,000 to 10,000 crores, the non-AP order book, what would that guidance come down to?
See, we are having 21,000 crores of order book, and we assume, we already have done 4,000. So another 6,000 we do, 21,000 will become 15,000. But we are looking at order accretion in the remaining 6 months of the current year of at least 10,000 crores. And if that comes again, that 15,000 will become 25,000.
But you're on track with the execution?
Yeah, we are on track with the execution. Faster execution is happening. Payment cycle is also good.
Okay, Mr. Murthy, we'll leave it at that. Thank you very much for joining us this afternoon. That's the management at NCC talking about their quarterly performance. Dabur, on the other hand, is the other one that we're keeping a close eye out on. We discussed the stock and how this stock has actually done pretty well for itself, despite not getting the buffer or the cushioning from a lower corporate tax. 478 on Dabur. So not bad going, actually, for a stock which has not done a whole lot much in comparison to some of the larger names. You would have, ideally that's been a favorite of an HUL or the likes of that, but like Dabur and ITC.
What beat this time around was the operating performance. The volume growth is still at the lower end that we've seen what the analyst was expecting. Let's see what the management though has to say on the September quarter numbers. Remember, it's a beat. The stock has reacted positively, and not to forget, it's an expensive stock which is trading almost at 50 times its FY20 earnings. It's totally at par when you see HUL also trading at higher levels. But Agam Vakil spoke to Mohit Malhotra, the CEO of the company, and started by asking how is the company looking at the consumption slowdown this time around. Listen in.
So our consolidated revenue has gone up by 4.1%. In the domestic standalone business, the revenue has gone up by 4.9%, backed by, in my mind, a very good volume growth of around 4.8%. While we've taken a price increase, but price increase got mitigated by the trade offers and consumer offers that we've given, so therefore the volume growth is 4.8. I think in the current circumstances of severe headwinds of economic slowdown, this kind of volume growth is absolutely fantastic. The only dampener in our top line growth has been the foods business, where we were faced with severe category decline of 7%. That being said, our foods business also increased market shares to an extent of 420 basis points, highest ever market share of 60.5 in the real segment. If I keep the food segment separate, without foods, the volume growth is actually to the tune of around 7.3% in the India business, and in which the standout performance was our healthcare business, which has actually grown by 11% in this slowdown environment, which I think by any standard is a great performance. And I think all our strategy pillars where we invested in are actually paying off. So we continue to stay the course on our strategy that we defined in the beginning of the year, that is invest in our power brands, keep investing disproportionately, focus on market shares. Our market shares across all the categories actually we've gained, except with the exception of air fresheners, be it healthcare, HPC, foods, everywhere. I think competitive intensity being high, but still our competitive position in the marketplace is extremely robust. And we've been investing in route to market. Our rural infrastructure investment continues. We in the last quarter increased number of villages that we're reaching directly by 3,000 villages. End of the year we should be reaching out to 55,000 villages. And as we speak, we are already in 51, so that's augured very well in the quarter. Our rural growth happens to be 300 basis points ahead of our urban growth, unlike the market in which the rural growth has witnessed a sharper slowdown as compared to urban. And our healthcare focus continues, as I talked about, and we've also stepped the gas on innovation. Now innovation and NPDs contribute to more than 3% of the total revenue that we have. So I think we are pretty happy and satisfied barring the foods business, and top line is great. The bottom line also grew by 7%, which is also a happy state of affairs. That got depressed by the one-off impairment provision that we've taken of 40 crores. If I leave that aside, then without exceptional items, our bottom line also grew by around 15.1%. Operating margins also inched up by 50 basis points to a level of 22.1%. So I think by all standards, the results seem to be pretty favorable to us and in line with our expectations.
Right. Mohit, my question then was to do with the state of consumption at this point in time. Are you seeing the effects of the slowdown still there, or do you see some of them waning? How are you expecting the second half of this financial year to pan out based on your current observations on ground?
So there's a very sharp decline in most of the segments where we guys operate in. If you look at the syndicated data, which is shared by Nielsen, in the second quarter of last year, the business FMCG market was growing at around 13%. Now it's down to 7%. Even in volume terms, it was in the range of 13%, now down to around 3%. And sequentially, the market growth rates have kind of tapered down. We are not seeing any recovery in the market growth rates yet. Like if you take segments where we are present in, hair oils are almost stagnant volume growth rates. Our toothpaste category, which is 90% penetrated in the country, is declining at 3%. Foods, I told you, is declining by 7%. So we are not seeing any, turning the bend as far as the market segments are concerned. That being said, our business is showing increase in the market shares. With the monsoon being near normal and with festive season just gone past, we are seeing some green shoots, and with coming in of winters, our healthcare portfolio becomes more salient. We are at a state where we'll have to wait and watch for another month before I can really comment with conviction that we have turned the bend and our volume growths will go beyond what they are at the current levels. Sure. So I can't really comment with conviction, but I think the slowdown is kind of bottomed out. So the only way from here is going up. But how much up? It's going to be very slow and gradual recovery.
Okay, fair enough. I understand that, Mohit. Also, a word on input costs and how things are panning out there. How are input costs turning out for Dabur, especially after the second quarter? Any changes? And based on that, do you expect any price action as far as your products are concerned?
See, input prices are pretty benign at the moment. I think the general environment of we are not seeing any inflation in most of our categories where we operate. So we are seeing deflationary environment. So we operate in three buckets. So one is crude linked, and the crude prices have been benign. So packaging material prices and oil related prices, they are low. Then we operate in agri commodities. We see inflation of around 2% in agri commodities, which we've been able to pass it on to the consumers owing to our competitive position. So we've taken a price increase of 2%, and that's rolled over from last year. In the current year, we'll take a calibrated price increase looking at the competitive intensity also. Specialty chemicals, there has been a minor inflation, which also I think can be easily passed on. So going forward, I think a price increase of around 2 to 3% would be there. That being said, generally it's a benign commodity environment, so our operating margins would be stable. Gross margins would go up on account of the benign raw material prices, but we would want to invest this in brand building and to shore up a market share in line with our strategy. Yeah.
Okay, Mohit, final question. Based on all the reports that I've read on Dabur over the last few months, especially since you have taken over, a lot of analysts seem to suggest that the focus clearly is on Ayurveda and healthcare. Could you state your plans further as to what you have in mind in terms of strategy going forward?
See, one of our major key strategic pillars for growth in the future is healthcare. So as I summarize in my mission and vision statement for the organization, that we want to take Ayurveda mainstream. So in line with this mission, we are actually working towards, so healthcare actually becomes the front runner for the company's growth, and we are working towards that. We are pretty salient in the health supplement category, with Chyawanprash being the window of consumers' equity for Dabur. We are trying to make it more mainstream, and therefore a gradual shift towards daily consumption and moving away from being seasonal to maybe all season sort of consumption. Honey also has to be brought from the medicine chest more onto the food table or the dining table, as we say. Glucose, we had to come out with modernized formats. If you look at our power brands, we've got 8 power brands, out of which majority of our power brands happen to be healthcare brands. So there will be a renewed focus on healthcare, and both in terms of media, creating consumer awareness, increasing penetrations, increasing our market shares, and making Ayurveda mainstream, and therefore embarking on a lot more innovations that we've done in the past also. Yeah.
Right, management of Dabur, the stock's up about 3.78%. Choka, let's come back to you and the ideas that we were earlier on talking about. I think Anjani Cement was the first one that we were talking about. You were making a point out there on a few other names.
Yeah, I would also recommend 2 more stocks, namely Jyoti Lab and Cochin Shipyard. I like Jyoti Lab because it is one of the cheapest FMCG stocks. Its valuation contracted because of the pledging of shares by the promoters. Now the promoters have revoked the pledging, and it has come down a lot, the pledged shares as a percentage of promoters holding. So now the valuation multiple should get re-rated. The company is also growing quite decently. And the third idea is Cochin Shipyard. It has come down almost around 40-50% from 2-year peak. Now the cash on the book is around 45% of the market cap, and recently it has got 3,000 crore order from the Indian defense system, and the kind of orders that they have on hand can cater to annual sales for next 3-4 years. And not only that, MOIL, another PSU, has announced date for buyback. Now I believe that all the cash-rich PSUs would come out with either buyback or special dividend because of the stress on the government fiscal condition. So therefore, I believe Cochin Shipyard, which is trading at a single-digit PE, can reward the investors in terms of huge special dividend or very attractive buyback. And all these 3 stocks we have invested personally, and we have also invested for all our clients.
Okay, I think Berger Paints has reported its numbers. We've got the top line and the bottom line coming out. There has been a tax benefit that has come in for the company, closer to 17.5 odd crores in terms of a deferred tax gain for the counter. Revenue has gone up 7% at 1,599 crores. Bottom line obviously getting aided, but aside from that, it is still a beat on the bottom line as compared to some of the analyst expectations. But the stock not reacting a whole lot much right now. Remember, a very expensive stock, almost 75 to 80 times, and this is even more expensive than an Asian Paints after the recent run-up that we've seen in the stock in the last 2 months, where it has moved up from levels of about 320 to about 500, where it's trading at this point in time. But that's the net profit number, I think 67% higher, 195 odd crores. It's time now to take a look at what has made it to Sharad Dubey's list of the Fab 4 stocks for the day. Sharad.
Good afternoon, Divina. The first stock I've picked up is based on earnings is Mahindra Holidays and Resorts. The stock is up more than 4% after it posted a good set of numbers. We see the revenues going up almost 8% to 555 crore rupees, and the net profit also, coming in at almost 24 crores. Now, if you see the occupancy levels, it stood at almost 74.4% for the quarter and 80% for the first half of the financial year 2020. Up next, we see Future Enterprises, which is also up on a higher earnings. The stock is up almost 8%, and if you see the Q2 margins have actually expanded by almost 350 basis points to 26.2%, and there was a growth seen in its manufacturing, trading, and also its logistics segments. Up next, we see Indiabulls Housing Finance, which is up almost 2%, as fresh longs have been seen with a high open interest of 10%, and the volumes coming in, trading in at almost 2 times its 20-day average. And the last stock of the day is ITC, which is up almost 1% after Macquarie stated in its note that the company will expect a growth in its market share for the cigarettes, and it will expect around 100 basis points of increase in the market share in the near term. And they have also set a target price of almost 261 rupees. Back to you.
Right, Sharad, thanks very much for that. So those were the Fab 4 stocks of the day. I want to go to Choka first off with Berger Paints. Choka, we're just seeing the numbers of Berger Paints. Obviously the stock has run up quite significantly in the last month and a half to 2 months, and doesn't look like the numbers are supporting that kind of price activity that we've seen.
No, the long-term investors can continue to hold stocks like Bajaj Paints. As you rightly said, valuations are extremely stretched. As I said earlier, it looks like it is time for a small cap and mid cap to outperform. That's what happened once in 3-4 years in the last 20 years. Whenever this entire segment was suppressed heavily, and they start outperforming the Sensex and Nifty by big margin. So now it's a view for small cap, mid cap. So from that relative perspective, I would give a sell call on Berger Paints. But those who want to hold it for 5-10 years may continue to hold it. Otherwise, in the short to medium term, I think the quality value stock in small cap would outperform Berger Paints.
Okay, that's Berger Paints for you. Remember, ahead of the numbers last 3-4 days, the stock had been muted considering the run that it had seen. The top line growth in terms of percentage, it's 7% on consolidated basis. Operating profit is coming at about 251 crore versus 220, which was seen in the corresponding quarter of last year. And it's a 67% growth in bottom line. Now that's boosted because of lower corporate tax rate. But let's take a quick technical check, Rahul. On the charts, it's been an outperformer considering the consolidation that we've seen in the last few days for Berger. Would you use these correction as an opportunity to create a long position, or it's best to stay away?
See, Navneet, if you look at across the whole of paint sector, you take it Asian Paint, Kansai Nerolac or Berger Paints, the stock has been moving very in a very momentum and tandem making in a upward journey, higher tops, higher bottoms, in upward rising channel. And in the recent past, maybe if you look at the charts in the past couple of months, the stock has never reacted or deviated from its primary trend. Yes, definitely currently in last 3 days we have seen some sort of cooling off of the stock, but the rise and the trend is still intact. Oscillators are just entering into a little bit of oversold setup on the lower degree charts. Maybe further some sort of cool off could be seen. Maybe ideally I feel that stock could settle down around 480 to 470. That would be the area where one can go long at the lower levels. Looking at the price strength, one should buy at those levels with a stop loss of 445 on the downside. I feel on the upside the stock has potential to test the levels of maybe 530 to 550 range in next 2 to 3 months. So definitely the price action seems to be positive. Momentum is also positive. Any further correction from these levels should be used to buy.
Okay, that's Berger Paints for you, sitting with cuts of 1.5% after the numbers have come in. Mr. Chokalingam, before we thank you, any specific company where according to you the earnings stood out?
I mean, not really in small or mid cap. I have not been attracted by any outstanding results in the small cap or mid cap space.
Okay, fair enough.
In fact, most of the results are yet to come. So.
Sure, we'll wait by for more numbers. On that note, we'd like to thank you. Thanks a lot for joining us and taking us through your views. I want to pull up PNB. Remember, the numbers came in a while back. The stocks corrected sharply. Also, remember, ahead of the numbers, we had seen a good rally for a lot of these PSU banking stocks, and PNB was one of them. It's a day's low, down 5%. The NII growth is 7%. The profits are at 507 versus the loss that we'd seen. But remember, I don't think the asset quality is looking that great because the net NPAs are at 7.65 versus 7.17, which was seen at the close of the June quarter. And of course, the provisions too are at the higher side, 2,900 crore versus 2,023 crore, which was seen in June quarter. Sachtandan, on the charts, considering the move on the upside in the last few days and today post the numbers a correction of 5%, how should one read this now?
I think it's a good sign of distribution again. If you look at the overall structure, the stock has been declining in a lower top, lower bottom sequence. And if you look at the hurdles out there, I think 70 was a very prominent resistance zone. If you look at today's data as well, post the announcement, we have seen a good amount of momentum in the stock. So I think the lower side of the trend is placed somewhere close to 60, 62. I think that particular level could be visited soon. So definitely it is one counter which should be on the short side until unless we don't see a recovery above 66.50 from here on. I think the momentum should push the stock further lower towards 56 kind of a band. So clearly the bias on this particular counter now gets more into negative zone, looking at the hurdle and looking at the way this particular resistance was respected and the momentum that it has gained again. So definitely on the short side, 66.50 should be the stop loss for the trade.
Stock from the broader markets which has gone up is JMC Projects. It's up, I guess, 11 to 12%. And this one too, by the way, came out with the numbers just a while back. So that's reacted quite positively to its earnings, 11% higher. And remember, Varun Beverages had come out with its numbers during market hours yesterday. But today, the stocks had a good run up, 12%. It's also touched its fresh 52-week high. The top line growth this time around from Varun Beverages was pretty strong, up about 49%. And the stocks are sitting with gains of 12%. I think Future Enterprises is the other one, which is up 7 to 8% as we speak, almost closer to 18 lakh shares there have been traded. Let's bring in our next guest, Dharmesh Kant of India Nivesh Securities, who joins us on the show now. Hi Dharmesh, good afternoon. A lot of numbers coming by, and of course we're now waiting for the biggie Titan among the Nifty constituent. An expensive stock, a cheat sheet was already there with regard to the update that management has already given for the September quarter, where jewelry sales were down because of some hedges which will be maturing, but retail sales, they said that it was up 7%. What sort of earnings are you expecting from Titan? Could there be any surprises like the one we just saw from Dabur in terms of operating performance?
Yeah, good afternoon. No, I don't think there would be any surprises on the positive side as far as Titan is concerned. Q2 numbers, particularly for FY20. So it would be, I mean, near double digit, I mean, lower teen kind of about 10-11% kind of a PAT growth should be there. That also helped by, you know, some tax adjustments. But on operating level or on the top line, as the management has already, you know, indicated about 6-7% growth, they can't be more than that. And not to forget, both the festivals, Dussehra and Diwali fell in the month of October, so that would be in Q3 and not in Q2. So that will also have some, you know, dent on the top line for the Q2 numbers are concerned. Going by the guidelines of the management for Q3, I think that's already discounted in the price. So whatever numbers come by Titan, the price, I mean, the stock price is extremely expensive at current levels. So I do see some profit taking happening by the traders and investors, and the stock would largely be sideways post the numbers because they have guided for a better, you know, Q3. So market will hold it. It won't crash, but at the same time, I don't see greater upside or a limited upside in Titan.
Okay. Polycap's at about 860 right now. It's high. Recent high was, I think, closer to 880 or 885. From there, it's cooled off a bit, but still up about 9-odd%. You know, from a business standpoint, if you were to take a look at a Polycab or a Havells, Dharmesh, what would the bet be on?
See, Havells would be a better bet, I think, but still, see, as going by the, you know, prices of all these companies are concerned, as far as stock prices are concerned, they are already trading at the upper band of their 10-year mean. So at least at one standard deviation from the mean. So that's the P multiple they are commanding, and the growth has not been there. So my own sense is that going forward, this market will see a shift from FMCG and, you know, consumer durables to more of a cyclical plays like automobiles, financials, cement, and infra stocks, rather than, you know, betting on the time-tested and more of a defensive kind of play in the utility, FMCG, and consumer durable space, because all these are very expensive. So again, let me make it very clear. I don't see a crash as far as stock prices are concerned in any of these, but a shift or a portfolio reallocation or realignment to the cyclical plays will happen, which will keep the upside limited for most of them. So from near-term perspective, or even for a 6 months to 1 year kind of a time horizon, one should not be buying into these stocks, rather than one should be dabbling into cyclicals.
Okay. The other one is Godrej Properties reported its quarterly numbers today. There was a shrinking of the top line, no new deals, no new projects. That's what the management said. 955 on the stock, and this last entire month the stock has not done a whole lot much. It's been down closer to 5-odd% for the month gone by. Sachidanand, on the charts for Godrej Properties, you know, it's had quite a volatile ride. You've seen the stock go up ahead and make peaks of 1100, then come down again to levels of 850 odd. What would you do with the stock now?
I think clearly these are the signs of consolidation. In fact, on the higher side, 1100 has been acting as a resistance, but on the lower side, if you look at the weekly cluster around 880, 860, this is a very looks like a very concrete, confident support. So probably from a momentum perspective, we may not see any bigger swings here on, but I think it is more on the consolidating side, and some more oscillation within this particular range could be expected in the coming months as well. So I don't see a bigger move breaking out, but I think for next couple of weeks, this particular range should hold.
Okay. Stay on with us, gentlemen. We'll come back to you and get in your closing thoughts as well, but it's time now to take a look at what dealing rooms are recommending this afternoon. Yatin Mota and Darshan Mehta, they're here with their channel checks. Good afternoon, guys. Darshan, let's start off with you.
Yeah, so tomorrow there are two large Nifty companies that will come out. One of them is Cipla, and dealers indicate that this time around Cipla will report very strong set of numbers. Remember, the first quarter they reported extremely poor set of numbers led by adjustments. Obviously, some of that will be reversed this quarter, but overall, operationally, they believe Cipla will be decent this time around. Hdfc Amc has been doing rather well for itself over the past few days. Dealers believe that Hdfc Amc most likely will be included in the MSCI. Remember, on Friday morning we'll have the list. Thursday night the MSCI inclusion list will be out, so reaction will come in on Friday. So these are two stocks, and apart from it, Bajaj Finance trading at record highs currently. The demand, what we believe and dealing rooms believe, is extremely strong for the QIP. Many large only and some of the global funds have actually taken stake in Bajaj Finance. So the investor list is extremely strong, and there is optimism here as per dealing rooms. But Yatin, what are you hearing?
Darshan, Tata Steel, and if you look at the last 5 minutes of trade, we have a sudden 2% kind of a fall in the shares of Tata Steel. Dealers on the basis of F&O trends are recommending a sell today, buy tomorrow kind of a strategy. So steel, which has been in uptrend, dealers finally are looking at some profit taking which can happen as far as steel stocks are concerned, including the likes of Tata Steel. Exide, watch out for this one. The stock is looking good to the dealers. They indicate that domestic funds are buyers as far as a few of these auto ancillaries are concerned, including the likes of Exide. So dealers expecting a positive uptrend here. And finally, Adani Power is one stock wherein dealers are indicating that at lower levels there is a lot of HNI buying which is happening in the counter.
Okay. Yatin, thanks very much for that. So that's a quick dealing room check. Bajaj Finance now stands at 4,217. Rahul, on the charts, I mean, now it's uncharted territory, but just the fact that you could see this fillip coming in from the QIP issue, do you see a further upside in the stock?
Yeah, definitely. On the daily chart, the stock has been forming a flag pattern, and currently it is on a verge of a breakout. On the upside, if we just see an equidistant height of a consolidation phase, even then we might see stock testing the levels of maybe 4450 to 4500 on the upside in short to medium term. So maybe stock is on the verge of breakout. Any momentum trader who wants to enter and take an opportunity for this momentum can enter at current levels. Stop loss should be placed below 4100 on the upside. Positionally, I feel that stock can test the levels of 4450 to 4500 in short to medium term, maybe 15-20 days.
Okay, from a strong counter to a weak counter, and that's Bharat Electronics, which has reacted negatively today, and it's only grinding lower. A lot of short positions are being built up here. The futures open interest is up nearly 20 to 21%. Sachitanan, if somebody is already holding short position, there is no sign of recovery that we've seen throughout the session. Should they be booking profits, or you would advise to stay put with the position?
Well, we're talking about BEL, right?
It's BEL.
I think the short position should be continued here. In fact, the way this entire momentum has been breached, definitely 120, 125 was a hurdle for the stock, and the way the reaction has happened and the gap is still open. So probably one should continue holding on to the short positions. The stop loss for the trade should be placed at 115, and I think on the lower side, again we may see this particular move getting extended right up to 104, 105, where it's 200-day exponential moving average is placed. So definitely one should ride on to their profits with a trailing stop loss at 115.
Okay. Dharmesh, there's a sudden interest coming back into metals, which has underperformed so far this calendar year, and the reasons, of course, known because of the prices. Would you take a bet here? I think the rally now that we've seen is started to already witness profit booking.
Yeah. So that's the problem with metals, as you know, they are very cyclical in nature and news flow driven. As far as fundamentals are concerned, there has not been any uptick in demand globally or in the or in India. The steel prices have been falling consistently. So has the case with ferroalloys and copper and aluminium. There is no traction anywhere in the metal prices, nor there has been a traction in the demand. What is happening is, based on the news flows, these do stage a pullback rally from the lows, and again goes back to the levels from where they started or even lower down. So it's very difficult to time it as well. I mean, 2 days or 3 days of a rally you get, and then it fizzles out. So fundamentally, I don't think there is still a case to buy metals, because if you look at China and everything, they are 50% of the capacity utilization is ideal for metal production. So any uptick is there, supply would be more than what the demand is there. So fundamentally, it's not worth a buy. Maybe one can trade on technicals or something like that, but I don't think it's an investor's bet in metals as of now.
Okay, let's put it that way then. It was a trading rally that one saw in the last 5 to 6 sessions. And remember JSPL, which was up about 11 to 12%. Brokerage is now highlighting with them winning the coal block could mean yearly savings of nearly 600 to 700 crore. Of course, profit taking seen for that counter. Pull up M&M Financials, that's down 3%. RBL Bank also seeing some selling pressure today. So that's below the mark of 300 as we speak. Yep, RBL Bank is down 3.5%. Sachtan, then, would you take a bet on the short side on M&M Financial or on RBL Bank?
I think RBL Bank, one can, in fact, looking at the overall structure, definitely it has been on the declining trend. There was some hope which was built, a couple of days back, but we already saw that particular swing getting materialized. We saw a swing close to around 325. If you look at today's action, I think the way the entire data is shaping up, probably the swing may extend right up to say 277, 275 zone. On the higher side, I think the stop loss should be placed on a closing basis about 302, and fresh shorts can be idled here.
Okay, 10 minutes left to go for market closing. So let's quickly get in those top calls for tomorrow. Buy today, sell tomorrow, sell today, buy tomorrow idea. Rahul, let's start off with you first.
I have a buy call in TCS. One can buy at current levels, which is 2200. On the upside for tomorrow, I feel that stock can test the level of 2250 with a stop loss of 2180.
Okay, that's TCS. Sachdan, what's your top call?
Well, I think I'll go ahead with the idea that we discussed at the beginning of the show, Birla Jute. I think the closing is forming really well. It is somewhere close to 625 right now, and the level which was challenging was around 620. So I think that particular hurdle has been crossed. So expect momentum to continue right up to say 660 on the higher side. The stop loss remains the same at 600.
Okay, Bajaj Finance now up 3%. That's at 4,238 and going strong right now. No stopping this one. This is at the highest point of the day. Dharmesh, you want to come in on Bajaj Finance?
Yeah, keep on holding it because there are hardly good NBFC stocks available, and see, it commands a premium. The valuations are very high, but it is the scenario for all the quality stocks which are there. So the type of results they gave for Q2, I do think the traction is going to continue and the scarcity premium will be there. So fresh buying at current levels, at current prices, I mean 4200, 4300 is not advisable. But at the same time, if one is having it in their portfolio, please do keep it in your portfolio.
Okay, have Bajaj Finance in your portfolio. Remember, the QIP floor price was 4,020, and on November 7th, I think the board will decide the issue price for this QIP process. It's at day's high, at lifetime high for Bajaj Finance, 4243 currently. Dharmesh, last word on the auto space. We've already had the monthly sales number coming for the previous month, which had festivals like Dhanteras as well as Diwali. But tell us, in terms of recovery, I think besides PV, there were no signs of recovery seen in any other vertical. Would you wait out before venturing out if somebody wants to deploy fresh capital into this sector?
I think staggered manner of deployment should be, should be the order, because one cannot go full out and buy the automobiles in the two-wheeler space as of now. But I do think the bottom is almost there. I don't think much further decline in the sales number going forward. Maybe a couple of months more. By March it should bottom out. So that's the 1 year cycle. The entire cycle is commenced from April, March last year, and we are ending that. And then it will be a lower base effect which will play out. Market always acts much in advance than when the number comes. So 3-4 months advance, you will see the build-up start happening in all the automobile space with lower cost of fund and good monsoons, everything in place. Buying should come sooner than later. So our advice is to start doing the cherry picking. Hero MotoCorp remains the top pick in the two-wheeler space with TVS Motors. We are avoiding Bajaj Auto as a buy as of now.
Okay. Dharmesh, the sudden change of commentary with regards to pharma, and some are taking contrarian bets on pharma as a pocket. Do you feel that that's a strategy that one could look at, and what would your best case scenario be for a Cipla that reports its numbers?
I think Cipla has a history of reporting one-offs in their quarterly earnings more often than not. And as the street is expecting a very good set of numbers tomorrow, so I'm skeptical about the same, because going by the their exclusivity expiring in one of the medicines which are launched in the US and other fundamentals which are in place, I don't see a reason why they should report a very good set of numbers, be it operating profit or on a PAT line. So I have my fingers crossed on that. So and the pharma as a space as a whole, I don't see a merit into buying any of the stocks as of now, because the news flow continues to be not very good or conducive. At the same time, the blended realizations have been falling, and operating profits have also, the margins are getting squeezed. So one has to wait out for pharma as a space to enter and deploy a fresh capital, though there may be contradictory reports coming out, but we are not in the buyer's camp as of now.
Okay, we'll let you go on that note. Dharmesh, thanks very much for joining us this afternoon. 2 stocks, Rahul, any stock that you want to comment? Actually, it's 3. You've got Mahindra Holidays, which is up 5.5%. Minda Corp is up 5.5%, and Dabur is also now up 5%.
So apart from these 3 stocks, I would be liking first is MHRIL, Mahindra Holidays. The stock has been into a consolidation. Price and volume action has to be consistent in a very broad range. The stock is making bottom and is poised for an upside rally. I mean to say a trend reversal. Those who want to take a call for maybe next 6 to 8 months can accumulate the stock at current levels and maybe on corrections to 230. The stock has potential to test the levels of 310 on the upside. It is a positional call because it is not a trading stock. So definitely one can accumulate at current levels and on corrections with a stop loss of 213, 215 for a target of 310. And if we talk about Dabur, Dabur has also seen a rally making higher tops, higher bottoms. The stock is on the verge of breaking out from the lifetime high. So maybe any corrections 2-3% from current levels should be used to buy at lower levels. Stop loss would be 465. On the upside, stock can test the levels of 500. So any correction in stock after this momentum should be used to buy at the lower levels.
Okay, that's the technical check on Dabur. Pull up SBI. Remember, we highlighted there was an auction taking place where the short sellers of the previous series were participating, and nearly 5.8 lakh shares were there for auction. The markets turned weak, but the stock actually recovered from the lower levels. 319, 320. Sachtanan, on the charts, how is SBI looking? Would you advise staying put with the long positions here, considering the markets have turned weak alongside the other PSU banks?
Well, I think this is the only counter, which is bucking the trend right now. And if you look at the overall structure, last few days, we saw a good amount of resistance around 310, 315 zone. But today, it has managed to sustain above that. But, looking at the entire market scenario, it is ideal to, book at least part profits and trail stop losses, very close. So probably in case someone wants to ride on to this particular move, the ideal stop loss for the longs would be around 317. In case if this particular level is breached, then probably we may see even this particular stock, getting into a negative zone. So ideally, I would suggest booking part profits and holding on to the balanced positions with a stop loss of 317, just because it has been outperforming and it has managed to sustain above the resistance zone.
Okay, that's on SPI, outperforming the markets, but unfortunately, that 7-day rally that we saw has come to an end today. For the Nifty, we're down about a marginal 18 odd points, but still in the red. We've got the Nifty Bank and the Sensex also in the red. Nifty Bank's lost about 100 odd points in today's session, still holding on to 30,200 though. In terms of the broader market space, the Nifty Small Cap Index has lost more ground, so closer to 1% under. Mid Cap Index has lost 1.2% this afternoon. Across the board that we've seen some amount of selling pressure that's building up. Even in sectors that were doing well in the morning session, which was metals, which was the best performing sector, finally closing the day in the red. In terms of the individual stocks on the index, Bharti Infratel, that's up about 4.5%. I think this is the third or the fourth straight day where you've seen a comeback from the counter. Bajaj Finance and the last 15 minutes of trade has really pushed up the stock a few notches. So 3.5% higher on the QIP. Yes Bank, Rakesh Junjunwala picking up about a 0.5% stake yesterday. This morning session saw the stock open with a higher gap, but now up 3%. Bharti Airtel, Bajaj Finserv, SBI doing well, 1.6%, and those are your gainers. Amongst the losers, he's down about 3.7%. Indices Bank, Ultratech Cement, Eicher Motors, Infi is down about 2% today, followed by Grasim and Sun Pharma too, which are looking slightly weak this afternoon. But the broader market space, I believe the breadth would also be slightly negative this afternoon.
That's right, Divina. We did see more of selling pressure coming for the broader markets today, and the market breadth is also weak. But there were a lot of stocks moving around, be it on back of numbers or there was some profit taking today. But let me start out with Dabur first, a counter which came out with the numbers. Operating performance was way better than what the street was expecting. The margins expanded, and I think the takeaway for us from the interaction with the management was that they said rural growth this time around for them was 300 basis point higher compared to urban, and that's not in line with what HUL said. For them, it was just half times. And remember, Dabur does get 50% of its revenue from the rural market. Hdfc Amc was bucking the trend today. That was up. JMC Projects came out with the numbers, so that also rallied about 11 to 12%. Warren Beverages touched 52-week high, and this counter had come out with the numbers yesterday. MEP Infra, I think, rose in the last half an hour or 45 minutes of trade, and that's closing around a day's high, 17.5% high for MEP. On the losing side, reacting to the numbers was PNB. Asset quality deteriorate, provisions were higher, and you did see profit taking coming up for these insurance players which were rallying. So GIC-RE, New India Assurance, both of them were down today. GIC-RE saw cuts of 4.5%, and New India closing with cuts of 3%. And Intellect Design Arena, the numbers were weak and the stock was locked in lower circuit, down 20%. Bharat Electronics once again down on back of weak set of numbers. Heavy amount of shorting was seen on the futures side, and RBL Bank in a weak market had to succumb to selling pressure. That's closing with cuts of about nearly 4%.
Today in the red for the broader markets as well as for the Nifty 50. This is the final snapshot of Tuesday's closing session. So Nifty Bank down about 0.5% with the Nifty 50 hovering around 11,900, and Sensex losing about 54 odd points. Point contributors, and that will come up on your screens next. In terms of gainers, Bajaj Finance contributing 8 odd points. Not too much in terms of heavy contribution there, but ITC, SBI saw that leg up in the last half an hour of trade. And amongst the bigger losers, Reliance, Infosys, Kotak Mahindra Bank and Indices Bank.
Well, and let's take a look at the market breadth, considering the broader markets today underperformed the frontline indices. As you can see, almost 2:1 in favor of the declines. When we opened, it was in favor of the advances. Looking at the participation then, let's see how the turnover panned out. I think it's lower, slightly lower than yesterday, 38,200 on the NSE cash side, and the F&O clocking that's higher than yesterday, 9.2 lakh crore.
All right, let's get into those closing comments done from our technical experts. Sachitan, let's come to you as we closed out today. What are we to look out for tomorrow?
Well, I think the entire set remains the same. In fact, on the Nifty spot, I was expecting a closing somewhere close to 11,900, but that would have activated, or that would have qualified the pattern, in a better way. But I think we may see this particular consolidation getting continued going forward. On the higher side, I don't see 12,000 getting breached immediately, but on the lower side, even 11,850, 800 remains as a very strong support. So probably we may see the Nifty, consolidating within this particular range in the next few trading sessions.
Okay. before we go to Rahul, I just want to quickly talk about one more set of numbers. Punjab National Bank reported a profit of 507 crore rupees in the second quarter of FY20 as against a loss of over 4,500 crore rupees in the same period last year. Asset quality deteriorated while provisions rose. Let's go across to Shefali Malik, who is in conversation with the bank's management. Shefali, over to you.
Well, the bank reported a loss, but the asset quality again was a main highlight for the bank. And we have Mr. L.V. Prabhakar, the Executive Director at Punjab National Bank, joining us. Mr. Prabhakar, so while you've reported a profit this time around of 507 crores, but it's still almost half of what you did in the first quarter, and the asset quality too has deteriorated. So could you talk to us about the factors that went behind the earnings this time?
Oh, okay. First thing is profit, whether it is a 507 crores or 1019 crores, it is a profit. And if you see our operating profit, it has increased by more than 25%. So naturally, when the operating profit has grown exponentially, there will be a profit. And the asset quality, if you have seen our guidance in the beginning of the year, we said that there will be a slippages of around 19,000 crores for whole year. So in line with that, whatever we have expected in the current quarter, basically out of this 7,400 crores where slippages are there, in this around 4,000 crores is from the corporate. As you know, the number of accounts or the name of the accounts which are already in the domain. Because of that, we have taken slippages of around 4,000 crores, and remaining amount is regarding the RAM sector, that is agriculture, MSME and retail. However, coming quarter, and the next quarter, our guidance is that our slippages will be restricted to 7,000 crores, taking full half year. As far as the recovery is concerned, taking into consideration the slippages, we have given a guidance of around 24,000 crores recoveries will be there. Out of this, we said that 11,000 crores will be from the NCLT accounts. In the last 2 quarters, NCLT contribution is hardly around 100 crores, and whatever recovery we have done around 6,500 crores, that is from all the small accounts. Going forward, we see that asset quality will be stable, and recovery in the small accounts will be still 6,000 crores, which will come to around, say, 12,000 crores, and then NCLT accounts will be additional. And you already know that there are 2 big NCLT accounts in which we have a sufficient exposure, which are almost in the final stage of resolution.
Mr. Prabhakar, but isn't this guidance too optimistic considering the fact that you're still saying that 19,000 crore piece guidance for slippages, and out of that around 12,000 crore piece slippages we've already seen in the first half of this year. So balance, balance second half, do we expect the slippages just to be to the tune of around 6,000-7,000 odd crores? Considering the current environment, isn't it a possibility that you may end up exceeding that guidance?
No, as per our calculation and the way in which we are monitoring the advances and the weaknesses and strengths we know internally. So our guidance is for the coming 2 quarters, it will be around 6,000 crores.
Okay. So how much were the recoveries in the second quarter? Because in the first quarter, you had recoveries worth about 2,300 crores. And you're guiding for the full year recoveries worth about 24,000 crores. Again, it hinges upon the 2 major NCLT accounts like you mentioned. So in case that doesn't happen, then what is the possibility of you meeting this guidance?
Ma'am, last quarter the recovery is including cash recovery and upgradation, it is 3,400 crores, and in the current quarter it is 3,035 crores, including both. So put together it is around 6,400 crores.
Okay, so that is my concern, sir, because for the full year you're saying that it's going to be 24,000 crore piece worth recoveries, and so far it's just been 6,000 crores total. So, in all possibility, you may miss this particular guidance.
No, let me clarify now. I said it is 24,000 crores, in which I said that from NCLT we are expecting around 11,000 crores. In 2 accounts itself, we are going to get a recovery of around 6,000 crores. So in 24,000 crores, if we exclude the 11,000 crores of NCLT accounts, 13,000 crores in which 6,400 crores we have already recovered. So recovering another 6,000 crores, that is 3,000 crores per quarter, that is Q3 and Q4 of FY20 will not be an issue.
Okay. Sir, during the quarter, you also got capital infusion from the government, but despite that, your advances growth has remained very feeble at just about 1.4% on a YOY basis. So is that how it's going to remain, or do you expect the credit growth to pick up meaningfully in the next 2 quarters?
See, if you see our credit growth, especially retail sector, we have grown at 18.8% in retail and 27.9% in housing. So if you take the retail segment, it has grown very well. Now coming to the corporate sector, in corporate sector we have degrown. That is the reason because of which our growth was around 2.2% as far as domestic credit is concerned. Going forward, our guidance will be the credit will grow at a rate of 8 to 10%.
Sir, I want to talk about the amount of provisioning that you've done during the quarter. It has grown, on a sequential basis. Provisioning for NPAs, and then I want to separately talk about the provisioning for a specific fraud account that you've done, that you've not done basically in this quarter and have deferred. So, but first, with regards to the provisioning for NPAs, where is basically this stress from, and for which accounts have you made this provisioning? And secondly, the provisioning that you've deferred to an amount of roughly about 2,000 crores. Which is this account? Is this the Nirav Modi account, or is this some other fraud account that we're talking about here?
See, as far as deferment of provision is concerned relating to the fraud accounts, as per RBI, you have a dispensation to do the provisioning in 4 quarters. Whichever accounts we have declared as fraud during the current quarter, we have made 25% provisioning, and remaining amount we said that we'll be making in the coming 3 quarters. So it is not one account. As far as Nirav Modi account is concerned, we have done 100% provisioning in the first 4 quarters itself when the fraud has been detected. So this provisioning is relating to this slippage of 7,400 crores. As I said, out of this 7,000 crores, 4,000 crores is corporate and remaining is RAM advances. So they are in substandard category, and it is a 15% provisioning it has been done.
Okay. And sir, in terms of incremental stress, the slippages that came in this quarter worth about 7460 crores. Where is the stress from? Any particular sectors or specific accounts?
See, in this corporate slippages, which I said it is around 4,000 crores, in that basically there are 3 big accounts. I don't want to name the accounts, but 3 big accounts contributed for the slippages. In the other 3,000 crores, it is the RAM accounts.
Sir, I want to talk about your exposure to DHFL. How much is your exposure, and what is the update with regards to that account, especially, and what is the way ahead? What is the latest update on that particular, exposure that you have?
See, our exposure is not very big as far as DHFL is concerned. And as you know, already intercreditor agreement has been signed, and the work is in progress for resolution.
Sir, just one last question. A report suggests that now the lenders may actually reject the DHFL's revival plan after the probe ordered by SFIO, and even the assets may be attached. So that may put the entire revival plan at jeopardy. So what's your take on that?
So as a PNB, we are going to be part of the the lenders consortium, and then in that we'll be taking a call regarding this one.
All right, Mr. Prabhakar, thank you so much for joining us. And with that, it's a wrap on this edition of Countdown.